We're breaking in with a special report. A massive sell off has just wiped hundreds of billions of dollars from the crypto market, and it's sending shockwaves across the globe. We are seeing widespread panic, and in this report, we're going to break down exactly what's happening.
So, what kicked off all this alarm? Bitcoin. It has absolutely plummeted, crashing to a critical new low around $60,000. And look, this isn't just a small dip. We've smashed through a major psychological and technical level, and it has the entire market on edge.
And you can just feel the mood in the market has completely soured. Sentiment has totally collapsed, hitting its lowest point in years. I mean, we have not seen this level of raw fear since the middle of 2022, right after that whole Terra blockchain catastrophe. To really put this into perspective for you, Bitcoin has tanked a staggering 38% from its 2026 high. And that's in just 3 weeks. Think about that. That rapid of a decline has wiped out 16 months of gains. Just gone. A truly brutal reversal. So the big question, right? Why is this happening and why now? Well, it's not just one thing. This is really a perfect storm of pressure from the global economy and some very specific weaknesses inside crypto, all coming to a head at once. First, let's just zoom out and look at the bigger picture. The global economy is pretty tense right now. We've got inflation that just won't quit, total uncertainty around interest rates, and a super strong US dollar. All of that makes risky assets like crypto look a lot less attractive. And then you pile on a sell-off in tech stocks and a Federal Reserve that's being really cautious about cutting rates. You know, when things get shaky, investors run for cover. They look for safe havens. For years, the big idea was that Bitcoin would be our digital gold. But as Jeff Koh over at CoinEx Research points out, it's just not acting like it right now. And that's causing investors to seriously rethink its role in their portfolios. So on top of all that outside pressure, the crypto market itself is showing some real signs of weakness. That initial buzz around the Bitcoin ETFs, it's really cooled off, and that big institutional money isn't flowing in like it was. We're also seeing some pretty bearish signals on chain, on the public ledger, that shows more people are moving their coins to exchanges. And that usually means one thing: they're getting ready to sell. So you take all of these factors, you put them together, and what you get is this powerful, vicious feedback loop of fear. And the impact on traders who are caught in the middle, it's been absolutely devastating. And if you want a perfect snapshot of the mood right now, this is it. This is the Crypto Fear and Greed Index, and it's basically a thermometer for how the market is feeling. Right now, it has plunged to just 9 out of 100. A score that low, it means one thing and one thing only: extreme fear. But this fear, it isn't just a feeling. It has a very real and a very, very high price tag. In just the past 24 hours alone, a staggering $2.7 billion has been liquidated, wiped from the market. So who's feeling the most pain? Well, take a look at this. A massive 85% of those liquidations, they were from leveraged longs. These are the traders who used borrowed money to make huge bets that the price would go up. But when it crashed instead, poof. Their positions were automatically force closed, which just adds fuel to the fire and pushes prices down even faster. The human cost here is just immense. We're talking about more than 588,000 individual traders, 500,000 people who have had their accounts completely liquidated in just the last day. It's a devastating blow for hundreds of thousands of people. So after all that carnage, everyone is asking the exact same question: what comes next? Is this the bottom, or is there more pain ahead? Right now, the market is deeply divided. There are really two competing stories in the market right now. On one hand, the short-term picture looks pretty bleak. Some analysts are warning we could see a potential drop all the way to a historical support level around $38,000. But then you have the other side, the long-term bulls, who see this as a massive buying opportunity, convinced that the overall bull cycle is still very much intact. And what's adding weight to that bearish case is this. This is a big one. Bitcoin has officially fallen below its 200-week exponential moving average. Now, historically, this line has always been the ultimate floor, the line of last defense. A break below it has only ever happened in the absolute deepest, darkest parts of a bear market. For traders, this is a major, major red flag. Okay, so as we start to wrap up this special report, let's try to distill this whole complicated situation down to its core elements. 4 key forces came together to create this crash. First, you have the shaky global economy pressuring all risky assets.
Second, institutional demand has really weakened, removing a key pillar of support. Third, the technical charts are flashing all kinds of warning signs. And fourth, all of this has triggered extreme fear, leading to those mass liquidations that just keep feeding the downward spiral. And that leaves us with the ultimate question. Is this a temporary, really painful correction in a bigger bull market, or is this the beginning of a prolonged crash? The market is truly at a crossroads. And one thing is for sure, we can expect a lot more volatility in the coming weeks.
This whole situation is changing by the hour. To stay on top of this fast-moving story with the latest news and analysis, make sure you're subscribed. We'll be here to guide you through it all.